Scott, driving around Hamilton City. Welcome to this month's vlog. There's been some inconsistent reporting in the media, the newspapers particularly, as to the state of the property market of late. Prices coming down, is volume coming down? Clients have been asking, is this a good time to buy, is it a good time to sell? I think the honest answer is that this is the best market that I have seen in the last 10 years to be buying property, and there's a few reasons for that. There are a lot of properties out there for sale at the moment, particularly in that lower price point, that investment price point. Lots of stock to choose from, some vendors who are pretty keen to get out of there, some good opportunities to be had. We know that capital prices have come down quite a bit from their high of 2006-2007, so we've got cheaper properties to look at. We also know that there isn't a lot of buyer competition at the moment. For whatever reason, buyers and investors haven't caught on to the fact that this is a great time to buy, and so they're sort of sitting back a bit and waiting. So you're not competing with a lot of other investors at the moment. It's a good time to pick through the stock that is there. There's also pretty good interest rates. You know, they're not as low as we've seen them, sure, but they're certainly not as high as we've seen them either. They are currently less than the 10-year average. It's a good, healthy rate. It's a good rate to invest in. We can get some good returns with the current interest rates. The most important reason, or the most significant reason, I think, to be getting out there and buying investment property at the moment is that there is a huge shortage in investment stock, or in properties that are available for rent. If you talk to the guys from our property management team, Lodge City Rentals, they manage some 3,500 properties throughout Hamilton City. There are currently 37 vacant properties, 1% of their portfolio. It's a good, it's good math. It just means that there is lots of people wanting to rent, not a lot of properties for them. Rents are likely to increase as a result of that. So it's a good time to take advantage. I think we should be getting out there and enjoying the market that we've got. It doesn't come around like this often, and you can bet that it won't get better than it currently is if you're looking to buy property. I think one of the reasons people have been sitting back a bit perhaps is that there's some uncertainty, of course, around the property tax. And I think we've been let off lightly. I think the announcement that John Key made recently enabled us all to breathe a sigh of relief. There's no capital gains tax, for example. In fact, there's none of anything that we were worried about. The only significant impact is the changes to depreciation. And I really think that this has been a gift. For so many years it hasn't made sense. We've been able to claim depreciation on our businesses or on our properties, which is inconsistent with other business models. We've enjoyed that depreciation throughout the term of our ownership, and then when we've come to sell the property for more than its book value, we've had to pay that back without penalties and without interest. So it has really been an interest-free loan. And it makes sense to me that that has been removed from the mix. I think the impact of it on property investors will be reasonably significant. My concern is that if people don't have an incentive to depreciate their buildings or to claim depreciation, they won't spend money on improving the properties, and that will result in a lower calibre of properties available for rent. And I think we'll find in the budget, when the details come out, that we will still be able to claim depreciation, but that it will be ring-fenced to a specific property. And so the impact of that is going to be minimal. A lot of the negative impact is going to be negated by the fact that personal tax rates are coming down. So we'll probably find, an average of 20 to 30 bucks a week per property is the true cost of being unable to claim the depreciation. So in the scheme of things, not significant. If you've been in property investment simply because of the depreciation tax abilities, you're probably in it for the wrong reason, and I don't think it'll change the way that we do business. So in summary, get out there. This is a great time, and enjoy the market that we've got. Start making some offers, start buying some properties. As always, I'd be grateful for the opportunity to assist you with that, and my details, of course, are on campbellscott.com. This is Campbell Scott. Talk to you soon.